Good morning, everyone. It's Dan Bassi and Ben Buckner back at you. It's Friday, the 20th of June. We're looking at the weekend, and we're coming back from a one-day holiday. So the markets are nervous, as you can imagine, relative to the Israeli-Iranian war. But remember, just like other wars, as this war lingers on, the market's going to be paying less and less attention. So crude oil prices were up overnight. They're now lower. We believe that the crude oil market has about $10 of war premium built into it. You can see where my mind is in terms of weather. And then as we look forward, again, whether or not talks will happen or the U.S. gets involved, I think will be important. But again, I believe as we think about the war, the crude oil market has enough premium in it relative to today, assuming the Strait of Hormuz stays open. I would also mention to all of you that, Iranian crude oil exports are increasing, and so they're pumping more oil out the door. So they are trying to, of course, raise currency. Iran will need that, of course, if this war is going to be long and lengthy. So that's something to pay attention to. But as we look at the grain markets, Ben, as we think about where we're at, we're up a little bit on the soybean and corn markets, down a little bit on wheat. Looks like world wheat prices did not follow Chicago higher on Thursday. And so leaving the mark. The other thing I would point out to look at the back end of these marks. I mean, there's a lot of premium in here, so we should think about making some sales on a longer term basis relative to producers. So, what do you got for us today, Ben?
Yeah, all good stuff. And I think the crude oil issue is also Iran's selling a lot of crude oil to China, so that complicates things even further. So China's not buying from anywhere else, more or less. So. I think we've got sort of normal course of events for us. And again, we're focused on fundamentals, cash supplies. And I think one thing that at least lingers in the background is the June 30th stocks report, and we are seeing export sales a little better than expected. Just under 36 million bushels for corn, and the week ending last Thursday. So they're not really retreating seasonally like they have the last couple of years. Although we'll look at this on a week-by-week basis. So far, exporters have sold, once again, 99% of the USDA's forecast. So USDA probably has to raise this another 50 million bushels or so to 2.7 billion. And all of a sudden, we're getting close to all-time records. What this means, though, I think is does residual use, which is unknowable more or less, unfortunately, does it offset this? And there have been surprises, pretty big surprises, in that June 30th stocks report on both sides. But again, we've kind of highlighted this before. The cash market does not seem to be telling us there is a looming supply issue. But again, the market has a hard time estimating, with precision, June 30th stocks. And so we'll have to wait and see what that is. But I think focus is still on what's coming at us, across the board, corn, wheat, and soybeans. NOAA on Thursday, over the holiday, updated their 30-day, 90-day, and long-term climate forecasts for the central U.S., and that's what you see here. So the top two are the July temperature and precipitation probability forecast. So not a lot of insight on the temperatures. They're not confident that we're going to see a lot of heat in July. I think that's important to note, especially given the recovery in values that we've seen. NOAA is still pretty confident you have drought or dryness to some extent across the far western corn belt, but you can see that their confidence is really centered on, Montana and the eastern part of the Pacific Northwest, so outside of the corn belt. And then the rest of summer outlook looks pretty similar. So again, not a lot of confidence that it's going to be overly hot, and then dryness kind of centered on the far northwestern fringe of major U.S. ag production. So we have talked a lot about probabilities. We've got a supply problem in the United States, and I think there's more evidence suggests that we won't likely see that NOAA updated forecast sort of underscore that today. Something we watch too is their associated 90-day drought forecast, and that's what this looks like. So drought persists in Nebraska, but otherwise in the major corn and soybean and even a lot of the spring wheat producing areas, nothing. Improvement in northern Illinois, northern Indiana. And so again, measuring probability, it does not seem that we're staring at a major weather problem as we get into key growing stages for corn, followed soon thereafter by soybean. So weather looks pretty good to us. And again, thinking about that being the background of this recovery in the ag space, we're thinking very, very hard about what to do and how to manage this risk. Even short term, focus on what's ahead of us. Soaking rain for Iowa the next 5 days. Up to 2 or 3 inches, maybe regionally heavier, Wisconsin, Minnesota. And then I think something that we've watched is it's going to get very, very hot in the central and eastern Midwest, starting tomorrow into Wednesday or Thursday. is it lasting? That's been top of mind for us every 6 hours, and it's been very consistent in that the heat will not be lasting. So it looks like it'll be pretty short term in nature. And then you've got rain coming back after the next 7 or 8 days, and it really outlines the corn belt. So again, we're thinking about what to do with big market moves, and we don't see a central U.S. weather staring at us in the face. And I think a lot of this can be explained by what's happened over not the next 2 weeks or 30 days. 3 months, 4 months. So again, I think that most likely corn stocks are gonna be fairly tight relative to history. But in a matter of 90 days, we're gonna have 17.2 billion bushels or so available to the U.S. market. And so again, thinking about physical supplies, physical cash markets, what is the chore of the market? What's the burden of the market? And today it is to some extent. We gotta not going to have an abundance of corn, later part of the summer, but that switches very, very abruptly early to mid autumn, and you've got to probably clear excess supplies because they're going to be very large, and that only happens with cash prices or futures as well. And so thinking about Argentina avoided crop problems, Brazil's got a big corn crop. Brazil's still shipping out a lot of soybeans, and Russian wheat is the cheapest origin today and have been going down the last couple of days, not going up. So again, I think the odds are we've got another day, another week that physical cash grain supplies will be pretty robust after the next couple of months. And so fundamentally, I think that's where we are in the markets. We're going to trade not just fundamentals on any given hour or given day, but against test, it's all U.S. weather, corn stocks on April 15th, soybean stocks, spring wheat stock, et cetera. And we don't see a real threat to that today. So that is where I see the things.
Good rundown, Ben. I really appreciate that. And that last chart sure resonated with me. The one disappointment I have is another week's gone by without a trade deal. So again, we've got one trade deal, and we're now looming on that July 9th tariff increase where we may go back to reciprocal tariffs of April 2nd. So I'm worried about that. And my real worry, though, is the U.S.-China trade negotiations. I mean, we made some progress in rare earths and a few other things, but joy, with getting a trade deal on a holistic basis, including agriculture, by the middle of August looks very, very tenuous and difficult to achieve. And to me, China is the big kahuna as we look forward in terms of these markets, and why people need to click on that QR code there and look at our research, because we're trying to manage that risk as we go forward. So with that, Ben, any closing comments for the weekend?
Again, Sunday night weather, like always, is going to be important, but we don't see huge threats. And we're making some moves in the market. So again, dollar gets you in for 30 days and check out our work. Again, it's kind of fine-tuning risk long-term is our goal for the next couple of weeks.
Yep. Yeah. Managing risk in this market is very, very key for producers. Be well, everyone. Have a great weekend. Thanks again, Ben, for that great rundown. And we'll see everybody on Monday.